Hi everybody, welcome to another segment of Mortgage IQ. Today we're going to increase your mortgage IQ by explaining a little bit what you need to know about the taxes. It's that time of year again. Yeah, I know, it's super exciting, isn't it, Ernie? Doing taxes. But as I said, I want to increase your mortgage IQ. And in order to do that, you need to know a little bit about taxes. So I'm very excited to introduce you today to Ernie Villany with Boulder Valley CPA. Ernie's a good friend of mine, also happens to be my personal CPA. He's taught me a lot, and I appreciate you being here today.
Oh, it's my
Ernie.
pleasure, Carrie. Absolutely.
Yeah. So there are a lot of pitfalls, and I see a lot of tax returns, and gosh, I see where there's some opportunity to maybe take some of those deductions that aren't showing up, and especially if you own real estate. So whether you've done a refinance or whether you've purchased a home or whether you've done an investment property or perhaps you're getting ready to do that, that's what I want Ernie to visit with us about today, are the pitfalls that people can run into on doing their tax returns. So what do you see as being some of the pitfalls, Ernie?
Some of the pitfalls that are easiest to explain are really missed opportunities. Rental real estate is a very complex area of taxation, and there are things that your average taxpayer or rental real estate investor or just regular real estate owner are not aware of because the rules are changing around them constantly.
Yeah, I see that on returns, like lost opportunities for sure. So with rental properties, I think that given those pitfalls, if somebody were going to buy, I get a question of when people are buying investment properties, they're like, yeah, but what's the exit strategy? You had mentioned something to me, about people don't understand those 1031 exchanges.
Yep. So rental real estate as an investment and as a wealth building strategy is really one of the most unique and probably one of the most robust areas for people to be able to concentrate.
Yeah. Yeah.
And one of the areas that people are not aware of or they may get stuck on is they may have a property that has appreciated in value significantly over the time that they've owned it. And for one reason or another, they feel that it's time to get out of that particular property. So what they may do unwittingly is sell it at a gain and pay a lot of taxes on that gain.
I just had one of those closings, exactly, and it was like we were at the closing, it's like, oh, we should have done a 1031, but...
And
right.
with a little planning, if they get some information on a 1031, they can sell that property, replace it with another property, and avoid the depreciation recapture that could be a significant tax expense to them, as well as the capital gains, because they may not be exiting rental real estate as a wealth building strategy. They're just exiting a particular property.
Right. Another reason to have that expert on your side. And also, Ernie, you told me about this interesting story about a couple, a husband and a wife, where they had a lot of real estate, but they were leaving some money on the table or spending too much.
Yep. So also, not only are individuals sometimes uninformed about a proper tax strategy with rental real estate, some preparers are also uninformed about proper strategy on rental real estate. And when you have multiple properties in your portfolio and you're protecting them with a limited liability company, some people will have an owner file a partnership return on a per property basis. And this is completely avoidable and very inexpensive to do. And the owner or the investor should create a parent LLC and then place all of those rental properties under that parent LLC so that they can file one consolidated tax return for all of the rental property.
Because quite frankly, if you didn't do that strategy, you would be charged for each LLC, correct?
Yes, and in some cases it can be downright painful. We've seen people with 7-8 properties paying $2,000 per return when they could have rolled those 6, 7, 8 properties under one return.
I see.
Sometimes spending $10,000 more than they need to.
Right. Well, the last question for the day is, how do you find a good CPA, certified public accountant? Like, what should you look for?
So if you're working
besides you,
if you're working with a qualified, experienced, and knowledgeable mortgage broker, those folks usually know how to find well-prepared, informed CPAs. But you really should be clearly asking your CPA or your tax professional, do they have experience in rental real estate? Many people on the surface feel that they do, but the complexities of some of the 1031 exchange rules, some of the material participation rules, which can be extraordinarily beneficial to a rental real estate investor, by which they can take losses up to $25,000 per year. Lots of preparers are not aware of that, so they should be asking people in that process, are they well vetted and well experienced in rental real estate?
Well, I feel very lucky that Ernie came into my life about 5 or 6 years ago, because he's giving my husband and I great advice. So I hope today's segment has increased your mortgage IQ. And if you have any questions, please feel free to contact me. And if you do like this series, please let me know, or how we can improve it. It will keep us going. All right, have a great day and increase your mortgage IQ.